Hey everyone! Today we're going to talk about unveiling the secrets of venture capital. This is a very interesting topic, and I'm sure that many of you might think that this is something they want to hear and understand more. Welcome to Invincible Innovation Live Show. I'm so glad that you're here. I'm Mazor, Kario, Product Innovation and Value Creation Expert, and I'll be your host. And I have a very, very special guest, Erwin. How are you?
Hi, Adi. I'm great, thank you. How are you?
I'm good. So, Erwin Feldhaus, he is a leadership, impact, and investment expert. Erwin is an experienced executive and entrepreneur. He coaches and advises board and C-level executives is a venture capital at Loyal BC, a global venture capital firm. He is a value-driven person who sees his purpose in creating positive impact through innovation and a strong focus on individual. He believes that building trust between all stakeholders is the best way to achieve sustainable results. Wow, I'm sure it's going to be interesting. We're live on
Wonderful.
YouTube and LinkedIn and Facebook, and you're so invited to join the discussion. And now we can really start. So, could you just have like a high level capture of what's going on with VCs today? We had these like 3 years of the pandemic, and we had so much money in, and so many people like exits and lots of like things going on, and now it's a bit different. So, could you just tell us what's going on right now?
Well, first of all, thank you, Adi, for that great introduction.
Sure.
Unfortunately, I don't have a crystal ball, so I don't know what the future will bring. However, I think that the current environment that we see in VC is not something that we have not seen before. We had after the bubble burst with the internet in 2001, we had a similar situation. And about 10, 12 years ago, after, or it's a bit more after the banking crisis in 2008, these can be seen maybe as cycles in the venture capital world. I don't know. I mean, at least what is probably happening is that valuations have cooled down. Not necessarily the best outcome scenario if you want to exit, but I guess for the entire stability of the system is probably something that's not bad.
Don't you think the valuations were too high? Like in the past, I remember in Israel, it was crazy that companies who were very successful, but yet like in tons of unicorns all over. Don't you think this is like the market fixing itself for that?
Well, valuations are there's no it's not a scientific thing, right? So basically, you will if someone is willing to pay a price, there will be always someone that will sell at that price, right?
Right.
So valuations are a way of showing the demand and offering. Um, Honestly, every entity is different, right? So every company will be different, and sometimes valuations are reflecting the real business situation. Sometimes they are inflated, sometimes they're undervalued, right? And that the investors need to be very smart about how they see the companies that they want to invest in, and do accordingly, right? So if you're an
Exactly.
investor in a company that's overvalued, and someone wants to buy your shares, you sell them. And
Yeah.
the same happens the other way around. If someone is selling very cheap, then there's a good opportunity for investing.
Yeah, but I don't know what exactly. I'm not like a financial person that understand the market and all of that. But it seems to me that this it was a very unusual time during the COVID, like 2 years, 3 years ago, 2 years ago, I would say. That you
Oh,
see
definitely. I
companies.
mean, the entire private equity sector has been, beating records after records over the years. That has cooled down right now, and it will remain like this probably for some time, and then who knows what comes after.
Yeah. So from the past periods that you mentioned, 2001, 2008, it took like what was in the past? Remind me, I have no clue what
So
happened there.
2001, I can tell you because I was the CTO and co-founder of a startup in France. We raised 15 million euros from venture capitalists and private investors, angels, in 2000, and we were very, very good at optimizing the valuation for a round, which in hindsight was probably not the best thing to do, because as we wanted to get more money, and the market had cooled down, nobody wanted to enter at the prices that we were trying to get. Hence, we were, as they say, in the water, and with that, we had to fold the company.
Mhm.
So that was a similar situation. It was probably, I don't know. I mean, it's always difficult to compare, but it was a similar situation as we have now. So if you and this is actually something very, very important I learned from that, is if you are as a as a startup, or as a company, if you overvalue yourself, you will not be prepared for a down round in a good way, and that may be big peril for your company.
I think that more than that, from what I know from Israeli entrepreneurs, they're very into what they're doing and their product and their clients and selling and getting like funding. And sometimes they forget that in many cases it's not related to them. The fact that the market is changing, they need to address it. Although they don't have a way to impact the market, but they need to evaluate it themselves in accordance to what could be done, and sometimes they see it like a bit later and they're not aware.
Yes, that's. I mean, it's very natural, right? I mean, you try to do a good job, and you're doing everything you can and things that you can control, but you can't control everything, right? And those things that you can't control, even sometimes you don't even know that they will happen, right? Who would have predicted the pandemic, or who would have predicted the war in Ukraine? I mean, and so these are two examples of many that you can bring up. So when you are in business, when you're starting a company, you're basically in for the long run, right? It's very rare that you can create a business overnight and then become a millionaire and then leave, right? This
Yeah,
is
but
these are
that's so
fairy tales.
funny.
It
Like,
may happen every now and then,
yeah.
and some people get really lucky, but you have to look at most of people do, and the majority don't have that experience. The
You know,
majority.
it's so funny what you're saying. I'm laughing and tell you what, because as I see it, like I'm an Israeli and I know the Israeli entrepreneurs, and I think it's very, very different maybe from, I know, European entrepreneur, like in their temperament and the way they see. And Israel was once described as the startup nation, right? The
uh,
exit is the thing, the startup, not creating companies. Companies are after you're a startup, you're establishing yourself and you create a company, right? But in Israel, being an entrepreneur is usually for 3 4 years. Either you exit or not, right? So this is how they see it, which is a very narrow way of seeing what's entrepreneurship. But this is many people going into it in Israel. This is how they see it.
that's definitely one way to see it. I mean, depends on what you're in for, right? So if you're in to make a lot of money as quick as possible, and this is your goal, you may find something that will provide that, right? But unfortunately, it's not what the majority experience, right? And also there's many. I would say even many more entrepreneurs that are in for creating really something purposeful, something that adds value to society, and that takes time. It takes time, and then you have to be resilient for good and bad times. When good times come, you have to be, you have to know that after the good times, the bad times follow, and the other way around. That's a
Yeah.
good thing.
Yeah, hopefully, it's true for life in general. It's not one
Yes,
directional, right?
entrepreneur. There's no difference between entrepreneurship and just life, right? I mean, it's the same thing.
Yeah. So let's talk about fundraising. So what entrepreneurs need to know when they come to a VC like you, Hal, and they need to fundraise.
Well, I think we can just build on top of what we just said. I mean, the entrepreneur needs to know what they are trying to achieve. There will be investors that will be fit for different purposes of business, right? So if you're in to make a quick buck and you want to exit fast, then a VC that is looking something for something like that, or an investor looking for something like that, then it's probably the one that you want to be with. If you're building something that will take some time and you know it's going to be slow, the last thing you want is an investor who is pressing you to grow fast and spend a lot of money. So it
Yeah.
is about knowing what the requirements of your business are and what the best support could be. And you have to be very careful to align your own goals with the goals of the investor.
Yeah, and I think that you need to know what is a good investor for your business and for you, right? Because investors, they don't just give money. Sometimes they have like requests other than that. Oh, I don't hear you. I hope you'll be back
I,
soon.
I'm back, so I was gone for
Yeah,
about two seconds.
yeah,
Um, yes, you need to be very clear about what you want, and the also more importantly, I would say you need to know what you're going to do with the money that you're going to raise. This it's not just a game of raising money and spending money. So you have to know what you're going to spend the money on. You have to have good reasons for that, because the money that someone is giving you, as an investor is giving you, they are expecting a return on that. So their view of things is that you will take their money and it will become more in the future. So you have to be very careful on how you decide what you will need, and also how you're going to be spending that money.
yeah, and try to estimate it as best as you can, although it's really hard. And where do you want to invest the money that you're getting? It's really important.
Yeah,
And VCs
you need to
ask
have a
about it.
sorry.
Yeah, VCs ask exactly what you're gonna do with the funds.
Sure. Every investor will do that. Every investor will
Yeah,
ask you what you want to do with the money, and then how you plan to provide it back at some point,
I
right?
see.
So venture capital is in for, these are financial investors, so they want to multiply the money. And the cycles in venture capital are totally different than the cycles, for example, of a family office that may be investing for the very long run, right?
Yeah. There is a question really related to what you said about the family office. Thanks, Naghimi Shad. I hope that I say it well. He said, can investor fund for service-based business? Usually we know about funding for tech products. Would they
Oh,
do that?
yes. I mean, service. I would say a very large portion of startups created these days are services businesses, right? And they are being funded the same way as technology or industrial businesses.
Could you give
Yeah.
us a good example for that, for a service-based, which is not like a SaaS product, not a technology?
SaaS is a service, right?
Yeah, but it's a technology. I think it's like a digital. It's not a service like I know, like somebody who's I know a technician.
For
I'm just thinking
I
like
take you for to give you for
yeah,
example, investing
mhm,
in companies that provide installation services for solar panels, right?
right.
That exists, right?
Yeah,
It's maybe not a field where venture capitalists are, because maybe that is not, and every, there's investors for everything. So I'm
yeah,
not excluding that some VC somewhere will be interested in doing that,
yeah.
but it would not be a typical VC type of investment,
Oh, I
at
see.
least
Okay.
from where I'm standing.
So thank you, Nagmi Shad. I hope that I said your name well. So when we were going as an entrepreneur to a VC, we need to know what we're asking, how much we're asking, how to estimate ourselves, what we're going to do with the money. And another thing is how do we sell our idea, how we're doing pitching. So what are a few tips for that?
Yeah, pitching. I mean, the it's a tough question for me to ask because Loyal VC, the VC where I'm a venture partner, we believe that the pitch process is broken. What do we mean by that?
Mhm.
Uh, you know, there's a lot of support in also from governments in different countries that help entrepreneurs prepare for raising money, and they prepare them. They give them money to spend on advice on how to create a good pitch deck and how to pitch, and you have today really a very good level of pitching. If I compare this to 20 something years ago when we were raising money, with the PowerPoint presentations that we had at the time, I probably wouldn't raise a cent today, right?
Yeah,
So it has evolved, and there is the main reason why the pitching is not sufficient is because as an investor you don't know really if this is going to, so you have very little in a pitch deck or in a pitch that will tell you if the team will be successful or not. So what
right.
we do is actually we invest after a very short due diligence, very small due diligence, and we invest very little money, and then over time we work together with the startups to see if we want to provide more capital later. Yeah.
And then one of the things that I know is interesting for you is the entrepreneurs themselves, and it's hard for from a 10-20 minutes like meeting to know exactly, because it's one of the most, I know if it's the most, one is a very important factor in the success of a startup, right?
Well, yes, and see it this way: if you get, I don't know, 10 minutes, 20 minutes to pitch. If you're a really good salesperson and you know how to pitch, you will do fantastic. But this doesn't tell anything about your ability to build a business. Yeah, there's very strong business people who are not really talented at pitching, and so they
Right,
are at the or so basically both the investors and the entrepreneurs are missing out on something there, right?
right,
So the pitching alone doesn't give you the information as an investor that the entrepreneur is going to be successful, and the entrepreneur himself will not be also providing everything that he can for the investor to make the best decision, right? But
right.
why do we do pitching is because we want to quickly know, is this something that we like or we don't like, right?
And is it something that, do you have an example of a mistake that you've made? Like, yeah, it looks like your great idea, the pitch was great, and the entrepreneurs looked really
I
experienced
have,
and
I have,
good.
yes, I have made mistakes as a business angel. So what happens? I see a pitch. And this is 10 years back or so when I started investing as an angel. So I like the pitch. I like the team. We had some light due diligence because angels we kind of don't. Well, at least at the time, I didn't do too much due diligence. And then after some time, I realized that actually, it was very difficult for this team to achieve what they said they wanted to do. It was impossible to know during that pitch process. It only became apparent afterwards when we were working together. And I changed my approach to something very similar than what we have with Loyal VC, which is I work pro bono with entrepreneurs first for some time to see if there's a good fit in terms of chemistry, in terms of working together, and then only then I move to let's say the next level, which would be maybe a small participation in their business or not. I mean, I do work with startups today where I'm not a shareholder. Yeah.
Yeah. It's I'm very happy that you said, because it's humble. I guess that many investors will say, I have this gut feeling and I know, right?
Yeah. Well, I mean, the gut feeling is good. I think gut feeling is always is always the best feeling that you can get. However, you also have to look at the stats, right? Only 4% of start businesses that get started actually live after 10 years. right?
Yes.
Or no, four make it big, and about 10% live after 10 years. That doesn't matter. I mean, it's very few
Yeah.
that actually
Few.
survive the initial years, right? And so
Right.
there's been plenty of excellent business ideas that have been put in a business plan, have raised money, created companies, and then still they didn't make it, no, for some reason.
Yeah. So we have another two questions from Nagmisha. He's asking, because services take more time than a product, would it make sense that a VC would say, okay, if we want something which is tangible and it will take a few years, we'll go with this company. And if we're saying like long run, it will take longer because it's a service until they establish themselves and all that, it will take longer.
Um, and this is me. I don't really look at the time it will take me for the duration, so for basically getting my money back. It's more and not and I don't look at the complexity of the offering either. um, for me, the more important thing is to understand: is this a business that will be able to scale or not? Right? If it's going to be able to scale, then that may be an interesting business for venture capital. Why? I mean, you have to understand how venture capital works, right? Venture capitalists create a fund. There's a management company, and there's a fund. The fund receives the money from the investors, the limited partners, basically, which are funds of funds, pension funds, whatever. And there's many types of people who would invest in a venture fund. And then there's these funds get created typically for something like 10 years, and the management company will charge the fund 2% of that fund to manage it, typically, right? So that means that 20% of the money that they put in has already disappeared in the management, right?
Yeah.
Then they have to make investments, and they know that many of their investments will not see the light. That means that they will fail, right? So that a
Hmm.
chunk of these 80% that are still there will uh, also be lost, or will be lost. The other one was for
Yes.
the management. So that means that with a fraction of the 100% of the fund, they need to make sufficient money to give the investors a return that typically will be something like 20-25% on a yearly basis, right? That means
Hmm.
that they need a few home runs, or at least a few very, very good companies that will make up for the rest. And then obviously the management company has an incentive to perform, because they will get a so-called carry, right? So
Mm.
if the business is something that will take, I don't know, 20 years to establish completely in the market, and will grow slowly, uh, the valuation will grow slowly, and this will not be necessarily something that will be preferred. Of course, I mean, for a different type of investor, this is a fantastic opportunity. Yes, because it
Yeah.
will certainly provide a very solid return, but over time. I don't know
Mm.
if that answers the question, but
Yeah, I understand. I was surprised you mentioned that it's not that important, but what is important, the fact that it will grow, and your evaluation of the capability of this product and this idea and this team to go through all of the obstacle on the way and to really succeed in that way.
yeah,
Uh,
and that's also going back to that initial question. You need to really know what you want to do with the business as an entrepreneur, to select the right type of financial partner, right? And so if you have something that will be able to, and that's why SaaS is so popular, because SaaS is a very scalable business model, right? You don't have to grow your teams. You don't have to hire that many people, to get many customers. And
yeah.
and but there's other services, businesses that, for example, consulting can be a very good business, but it's not necessarily scalable, at the sense that you have to hire people to grow, right?
Yeah, yeah, and I think that that in general, other than maybe marketing, which is important in order to get all the additional clients you want to have for a product, if you have a very good product, it's you have this core value that you create, and afterwards, what you need to do is to make it as good as possible for people to have more and more people just engage with it and pay you for the service, for the in that case, a SaaS service. So it really
Yeah,
makes sense. So
yeah.
we talked about loyal VC, and I'm asking right now, we talked about it in the past, how can you create a positive impact with the VC? You know, most people, when they think about VC, they think about money, capitalism, making more money if possible, and they're not thinking about positive impact, right?
Look, the loyal portfolio of 320 companies has 90% of these companies address at least one of the sustainability goals of the UN, right? So what this said, what this doesn't say is that loyal is a impact investor. I mean, we're not out there saying that we're impact investor, but we're about saying that creating a positive impact can be a very good business as well, right? And so
Yeah,
there's many good businesses that are creating valuable contributions to society to the environment, which also generate returns for their investors. So I don't separate making money from creating a positive impact. I think that the core is analyzing, okay, if I'm going to create a company, is this going to add value to society, yes or no? If
yeah,
yes, and how can I make this also to be a very good business for the investors? These are kind of the questions,
yeah,
right?
yeah. So give us a few examples from your portfolio.
um, we have a number of companies in education technology, right? Bringing education using technology, bringing education to populations that are not somehow sufficiently networked in a, let's say, the traditional economy, which would be rural type of populations. No?
Mm-hmm.
That could be, one nice example, education technology.
Yeah.
There's also clean tech companies that are trying to work with recycling. There's one company we just invested in that is recycling electronics. So there's plenty examples.
Yeah. And did you decide to go to Loyal VC because of this positive impact, or it's a side effect?
It's basically a synergy, right? So
Mm-hmm.
we think very much alike. I mean,
Mm-hmm.
we're all the people at Loyal VC have a similar values-based approach to things. We are entrepreneurs, and one of the co-founders of Loyal said once, this would be the sort of VC I would have liked to have when I was an first time entrepreneur, because we're entrepreneurs, we think like entrepreneurs, and we're providing the capital that entrepreneurs need, but
And
also
don't
the support. Yeah. Mhm.
and the support. Do you think that some of these, like if we're talking education and clean tech and these kinds of technologies, don't you think that it should be sometimes a governmental point of view to fund them, which like it needs to be somehow related to what's going on in the world, right?
Absolutely. I mean, and I think the um, people who have strong values and strong purpose in life, they will always try to come up with something that will contribute to solving the problem, and not the other way around, not contribute to the problem, right? And if you look at the sort of companies that were being created 20 years ago and the companies that are being created these days, there's much more business that you see around trying to address climate change problems, right? Is this sufficient? I mean, is it sufficient to think that all the new startups will fix the world? Of course not. I mean, this is much bigger than that. But it does show that not everyone in society is totally oblivious about this.
Yeah. And you, when you're thinking about your own career, do you think that right now you're in a better, like, this is where I want to be? Like, I'm in the right place. I got to this right place.
Well, you know, I kind of say that it all evolves, right? I mean, when you're
Sure.
30, it's not the same with that when you're 50. You're in a different part of your life. And but yes, sure. I mean, I love what I'm doing, and I'm very much in touch with the younger generations that are building new companies, and you know, I, that's where my heart is. Yes.
Yeah. And what did you learn going from being an entrepreneur and then moving to VC and to this VC? What did you learn along the way?
Never stop learning.
Yeah.
You have well, one of the key learnings I made, and we spoke about this, is when you're trying to fund a business, you need to know why you're funding it. So what is it that you want to do, and what are you going to use the money for, and what is the best fit between you and the potential investor, right? I learned that I did not see that as being crucial at the beginning. And to, frankly speaking, when you're an entrepreneur and there's someone that wants to give you money, you don't ask too many questions. You just take the
Sure.
money, right? But it pays to actually spend some time thinking about those things. Yeah.
Yeah. So how can we build trust between all these stakeholders when we're doing that?
I think aligning the incentives is always very good, right? So because if you want the same thing as your investors, then the basis for a good and trustworthy relationship is there.
Mhm.
Um, Trustful, sorry. The people, the relationships between people is also very important part, right? I mean, you don't need to be friends with your investors and even with your business partners. What you need to do is you need to be in a respectful and can also be challenging relationship. So it's if you have different views, you have conflicting positions. It doesn't make this a bad relationship. What needs to happen is that there needs to be a level of respect and a level of maturity, so that this is actually used for the better and not for the worse.
So, most people when they think about the VC, they would think about money, and then they would say, okay, these are very sharp businessmen who know men usually. Um,
Unfortunately, yes,
right.
the industry is too male dominated. This is one of the
Yeah.
things that probably needs to change.
Yeah, we could. That's my next question afterwards. So what I'm so what I'm thinking is that this is what they have in mind, and most people will not think about this kind of soft skills or relationship based capabilities that you need, because you need to know that people, even your partners, would not always agree with you, not on the goals, not on the
Exactly.
way, and the way that you're doing things would change on your journey. And you need to be flexible and understand that, yeah, we can disagree, but we need to respect each other and strive to have the best optimized solution that we could handle, as
Yes,
I see it.
yes. I mean, it's always very smart to know who your stakeholders are going to be, and you need to know what is it that will define your relationship with those stakeholders, right? And stakeholders
Mhm.
are investors, are customers, are suppliers, are employees, are government, non-governmental organizations. It depends on what you're doing, but there's everybody is a stakeholder. Even the families of the employees, for example, are
Yeah.
stakeholders in this.
Yeah. I
And
have a
so,
very funny story about like in Israel, usually entrepreneurs, two or three of them, they get together, and sometimes they don't even consider the spouse and the family,
Yeah,
but the spouse is very important. Sometimes from the back, and you don't see them, but they're impacting the energy and the motivation and the thoughts of your partner in the end.
of course, of course. I mean, it's
Yeah,
again, we started by saying that entrepreneurship is life, right? So in life, everything in life is part of it. So uh, there's for example, when you get a job, a 9 to 5 job, you can, which I don't think is correct, but you can actually just go there, and when it's time to go home, you just forget everything, and you have a different life there. In entrepreneurship, even if you want to do that, this will not happen, right? I mean, you're all, around the clock. You're thinking about your business, and you're acting and doing everything around in consideration of your business. So yeah, your
yeah.
family is a big part of it.
Yeah. So going back to my question about women and VCs, why do you think most people, and by the way, in Israel, in financial sector, banking, we have lots of women, like head of the biggest banks in Israel are women. And why do you think in VCs it doesn't happen?
Well, there may be many reasons, and one of them is that the business world has been male dominated for many years, and it's only in the recent times that we're trying to change that. But and there's preconceptions, and there's probably all sorts of reasons why this is. One thing that has been proven is that when a male founder pitches to a set of investors, uh, he is more likely to get money than if it's a female founder who is
Right,
pitching. But this is only
right.
for the initial part. Later, it doesn't continue like that. So again, coming back to the topic pitching today, why do we kind of not like this process is also one of the reasons. And
Yeah,
in the portfolio of Loyal, we have 100 female founders. So it's a
wow.
third of all founders. I mean, it's still 50% of the more than 50% of the population is female. So hopefully, at some point, we will have a representation of 50% in the portfolio as well. But
Yeah.
30%, if you ask around with VCs and ask them how many female founders they have in their portfolio, it's typically much less than that. Yeah.
Yeah. And we have to say that this is a cycle because if you get less funds, you have less opportunity to be a successful startup and then less option to have lots of money that you could afterwards invest either as an angel or as part of a VC. So you don't have this traction or
Yeah.
capability to get there because
Yeah.
most people, when they work in a VC, it's not because they're just a good professional, because some of them would bring the money with them, right?
Yeah, and yeah, I mean, as in every, let's say, community. I'm talking now in terms of who the people are, right? The more diverse this community, the more valuable it is, right? So it's not just gender, right? I mean, cognitive uh, diversity is probably the most important part. Uh, if you have just a bunch of yes men, you will not get best outcomes because people are just going to be, very non-creative when trying to get something done. If there's not sufficient discussion around things, then the outcome is not as optimal. And
Yeah.
so in every board today, the more diverse the board is, the stronger this company will be. Same in executive management and the teams and everything, right? So I
Yeah.
think there's a value in investing and it does not have to be like a forceful thing, right? I mean, it's not that you have to generate quotas for every possible diverse viewpoint. No, it
Yeah.
has to be something that is intrinsic in the values of these groups.
Yeah. I think it needs to come from really understanding that it's valuable and it's
Yeah,
important. And
yeah,
only
it's
from
good
there,
business.
yeah,
Yeah,
it's good for the business. It's not because you're courteous and you're kind to have more
right.
women entrepreneur or part of your board. You're doing
Yeah,
that because it's good for your business.
exactly. Yeah.
Yeah. So I'm almost done. I have like a few more questions. I want to ask you what is the most important aspect of a successful VC?
I don't know.
I surely don't know, but
I
what
don't
would
know.
you imagine? What
I
makes
don't.
I know what's the biggest VC in the world. I have no idea. Who are they?
I don't know.
Let's say a very very successful VC. I know. In my imagination, they're coming from the U.S., but I have no idea.
Mm.
Okay, and they have like the percentage of success is instead of we mentioned 4%, right? Something like that is 8% of the companies they invest in are a really big success. What would be the factor? Is it like very smart people sitting
Let
there?
me rephrase your question. So
Yeah.
how do you define success for the VC? So if this is
Hmm.
about the returns for the for the limited partners, then probably there's a ranking, and you probably can see the returns that most VCs in the world have given to their LPs. You could see that, right? But if you define success as the number of companies that they generated, or if you define success about the more impactful businesses they have supported, right? So these are very different performance
Yeah.
indicators, and I would say is that they are not less important. But
Yeah.
I don't know. I mean, I don't know the answer to your question. I do think that statistics don't lie, and investing in young ventures is a risky business because there's high risk that these companies will fail, and everything you do in terms of reducing that risk and make it less risky is probably a good idea, right?
Yeah.
So then you can ask yourself, is it better to have a very large portfolio and then just keep investing in those who are strong in that portfolio, or having a small, very select portfolio?
Yeah.
There will be always a good discussion around these things.
Yeah. I see. Okay. So what is your number one tip for entrepreneurs and leaders today?
My number one tip for entrepreneurs and business leaders is, let's say today, I would say, make sure you know all your stakeholders, make sure you know what the purpose of your business is, make sure that you align your stakeholders with that purpose, make sure that they know the purpose and that they support the cause that you're trying to promote, and that is going to help you to get more customers. That is going to help you to get investors if you need investors. If you don't need investors, that's also very good. You can build a very successful company without ever giving any investor the chance to invest in it. You can do it yourself, and then also, lastly but not last but not least, make sure that your inner circle is aligned with what you're doing. So make sure
Yeah.
that if you have a family, that they are supporting you, and you support them.
Yeah. Of course. Okay, it's been a pleasure talking to you. Where could people hear more about what you're doing and contact you?
Well, you can reach out to me over LinkedIn. I normally also respond very quickly. I mean, very quickly. Sometimes it takes a bit of time, but I typically always respond. And
Mhm.
yeah, just engage in a conversation.
Wow. So it's been our second or third conversation. It's always interesting to talk to you, Erwin. And I really like the fact that although, most people would think that talking to VC would be more, serious, it's always more fun to talk to you than expected. So thank you for that.
Thank you,
And
Adi. It's
sure.
always a pleasure talking to you too. You know, you need to know that too.
Thanks. Thank you for your time. It's been very insightful and I really enjoyed it. And usually when I talk to people, it's more domains that I feel comfortable about. And I felt comfortable just to bring you along for subjects that I'm not like that aware of. I'm doing lots of work with entrepreneurs and I do less of the part of funding and understand the money. And I think it's really important in general to understand how it works. And I think
Yeah,
that we got a few insights about that. So thank you for your time. Pleasure talking to
absolutely.
you.
Absolutely. Thank you, Adi.
Sure. Thanks. And to all of you change makers out there, thank you for joining us. And I'll see you next week with another innovative, insightful talk. See ya. Bye bye.